up, we can go from there. Given we have such a small and tight group here at the moment, please, this does not have to be a one-way conversation, one way or another. If there's anything that is unclear or anything that I'm saying that you want to ask questions about, please just either physically interrupt me or virtually stick your hand up, and please just get your questions in. I'll start off quickly with just an introduction to myself. I might ask Michael to give a quick intro to himself as well, and then we can go from there. So first off, thank you very much for making the time this morning, everybody. My name is Dara Gaffney. I'm the country lead for Leighton, Ireland. Small bit about myself, first and foremost. I come from a technical background, predominantly in a background in chemistry and biochemistry, and I've spent, I suppose, my whole career in R&D focused roles since I graduated from University of Limerick. As it happens, in the semiconductor area, first and foremost with analog devices, I was an R&D process engineer there, and then after that, then actually worked as an R&D director for a division of the Monaghan Mushroom Group called MBio. And as you can imagine, as a very large FMCG, high volume, commodity-based business, packaging was an extremely important part of what we looked at when I was up with Monaghan Mushrooms as well. So hopefully there's a small bit of relevance there. Worked for an innovation network then for about 5 years, over 300 members, all companies active in the area of research and innovation, and then joined Leighton actually a year ago this month to head up the Irish operations and grow the Irish business. And I think at that point, Michael, I'll let you quickly introduce yourself if that works.
Yep. Hello, everybody. My name is Michael. I'm a technical consultant here at Leighton. I joined the business there in January as part of our growing operation here in Dublin. My background is in industrial scale manufacturing, where I was an innovation and R&D lead for over 10 years, and I worked across sites here in Ireland, the UK, and Germany. We would have been heavily focused on FMCG products, which would have included development work on sustainability initiatives, which would be packaging, labeling, areas like that. So I'm happy to be on the call today and answer any questions you might have.
Great, thanks, Michael. And just for the few guys that have joined late, the only thing you've missed so far is intros. And please, if there's anything you want to stop and interrupt mid-session, please do. Otherwise, we'll do Q&A at the end, one way or another. Okay. Really quickly, I'll just kick off with Leighton just to give you, and literally 30 seconds to give you a scene set on that. So Leighton is a global tax innovation consultancy. It's probably the largest tax innovation consultancy you've never heard of, to be honest. We've got in existence since 1997. And we've got over 3,000 employees across that global footprint, predominantly in the Northern Hemisphere, but also actually we've started to expand into Australia and New Zealand as well. Basically, anywhere where innovation or tax incentives exist for businesses, we exist one way or another. As you can see, in terms of the amount of funding that we've been able to leverage, there's about 1.5 billion across, I think, 50,000 clients globally that we service. In terms of the Irish operations, Leighton was actually active in Ireland up until 2012, until Deloitte acquired the Irish unit of the business. And then after a 10-year non-compete, about 3.5 years ago, re-entered the Irish market. And I came in, as I said, about a year ago to grow the business, came in as employee number 1, and we've now got a team of 9 in the Dublin office. That team, my plan then is to double that team, slightly double it to 20 by this time next year. So rapidly growing and scaling. And we've, just to give you an idea, we've, I think, 262 clients in Ireland since coming back into the Irish market there about 3.5 years ago. So that's Leighton. Just to give you an idea of some of the companies, these are probably more some of our global clients. To be honest, we don't confidentiality is at the core of everything that we do. So we don't always talk about our Irish-based clients in terms of case studies and name them specifically. But you can see at a group level some of the global brands that we work with there across the board. Okay. Let's start a bit. I don't know. I'm pleased, like whether you want to do it with a digital raise your hand or even verbally say it. First off, are any of you even familiar with the R&D tax credit scheme in Ireland, or do you already leverage it within your business at all? So, Tom, you've thrown your video on, so I hope you have something to say. Good morning, by the way.
That was a mistake. Good morning. Sorry, I was a bit late. I had some tea.
I think your mic is a bit low, Tom. I'm not too sure what it is.
Beg your pardon. Sorry, I was a bit late. I had some IT problems getting on the meeting.
That's all right.
Yeah, slightly familiar. In previous lives, I used to work for MasterCard, and we did avail of fairly significant R&D tax credits and software development and Bitcoin and blockchain and stuff like that. But just one question I'd have you is in where I currently am, manufacturing company, the printed image is constantly inundated with emails telling us, did you know you can get R&D tax credits? We're your advisors. We can help you. You don't have to do anything. We'll just come in and look at what you do, and we'll make you loads of money, and you'll be off in the Bahamas in no time. So that was one of the questions I had. But I am familiar with it, and would have found it in the past, as I'm an accountant, a very laborious and time-consuming application process.
Yeah. Okay. Perfect. Well, look, let me walk through some of that first and foremost, and just do a really quick scene set, Tom, and then I can, if you want to know how, I don't want this to be a sales pitch. It's not what I came on here to do. It was more from an education point of view. But if you do want to understand any more of that, happy to chat through that. Okay. Look, I suppose for anybody else, then I've taken this back at an R&D tax credits 101 kind of approach. Okay. First off, you see that like Micheál Martin was at a Scale Ireland event there just after Christmas down in Cork, talking about how, we don't know what more we can do to get Irish businesses to use the R&D tax credits. Now, I do know what more they could do, but anyway, but from a public policy point of view, the R&D tax credit scheme in Ireland is the most generous across the OECD, one way or another. It's 30%. It was 30% in 2025, and it's gone up to 35% in 26. But I'll dig into that in a bit more. But what is it? Okay, and I think quite often in, I suppose, non-traditional scientific sectors, maybe non-white lab coat sectors, companies either one go, I think I might be, or no, R&D isn't for us. But let me walk through some of what the legislation says first and foremost, and just from a definition point of view. Really, there's only three areas that you need to look at, and two are the most important. One is are you looking to resolve either a technological or a scientific uncertainty? Okay, so at the start of a project or at the start of an initiative within your business, was it technologically uncertain, one, how you were going to do it, or two, whether you could get to the end result that you were going to actually get to? Okay. The second thing that you need to identify is that there needs to be an advancement in the field. Okay. And that advancement either needs to be either the end product or the end service, or it needs to be the manner in which you got there. Okay. So another misnomer sometimes that, or misperception that people think is, but at the end of this process, I'm going to generate a Me Too service or a Me Too product. That's okay if one, you develop a new process or manner to get there, and two, the existing manner or process to get there is behind, for instance, a trade secret or locked behind know-how that your competitors have and that you don't have access to, and that you've had to develop a brand new process or methodology to get there. Okay, so it doesn't have to be new to the world. It just needs to be new to you and inaccessible before you started the project. Okay, and you can see what I think it's as important to say what is not included. What I'd call is quite often the regular business as usual based based projects. So routine modifications of projects, processes, or services within those small iterations that you might do just to kind of improve something around the edges. And you can see this is purely from a definition point of view. It must be either basic research, applied research, or experimental development. In reality, it's academia that's going to be doing basic research. You guys aren't going to be in that space, really.
I have a question, sorry.
Sure, Andrea, go ahead, yeah.
So does that mean that if there's a big change in the process that it's new for ourselves, then that will apply?
So there's a few definitions here, and Michael can help me out with the absolute definitions. But if it was not immediately obvious to what's called a competent professional in the field how to do it, and the manner in which to do it was not available to you to access, I suppose, off the shelf, then potentially, yeah. Or an aspect of it, the front end aspect of developing that process could qualify, yeah.
Would it qualify something that it already started and it's kind of changing and it's like an experimental development?
Yeah, so if you had something that you went, if you had bought something like plug and play, and now you're bringing it into your facility, but it's actually not working the way it's intended, and you have to make the modifications and particular step changes around the work, then it may qualify within the scheme.
Yeah. So integration of off-the-shelf solutions are as viable as developing something brand new from scratch yourself. Yeah, absolutely, Andrea.
Gotcha. Thank you.
Okay, no problem. Okay, so in terms of what, let's put some tangible value on this. What does it actually look like? Well, you can see that for 2025, there's 30 euros back for every 100 euros of qualifying expenditure that you identify within your business, and it must be claimed within 12 months from the end of your accounting period. So if you're a December year end, you can, and you're going to file your CT1 at some point in this year, you can only go back one accounting period. So you can only go back to 2025, unfortunately. In the UK, you can go back 2 years, but unfortunately, it's only 1 year in Ireland. And then since 2022, you can choose how you received a credit. So if you have a corporation tax liability within your business, you may offset it against that liability, or you can take it as a cash refund, whichever. By the way, you do not have to be profitable. You do not have to be in a positive EBITDA, any of those kind of things. Once you are liable for corporation tax within Ireland and 2 revenue commissioners, you may qualify for the R&D tax credit scheme. The manner in which you receive that then is kind of up to yourself to chunk. You can see then as well that the rate has increased to 35% from accounting periods 1st of January 26. And also the manner, if you take, well, actually it depends on, it doesn't matter whether you take it as an offset or whether you take it as a cash injection, but the credit is split across 3 accounting periods. So if your tax credit is for 2025 is 75,000 euros or less, you may take it all in one lump sum in that first year. Okay. However, if it is over 75,000 euros, it is split across 50% year 1, 30% year 2, 20% year 3. And obviously then as you build up a cadence of claiming the R&D tax credit over a multi-year period, you know, they start to stack up as you get year 1, year 2, and year 3, all in 1 year as a result. And you can see that for 26, that's gone from 75,000 to 87,500 euros. So that's specifically, the government looked at previous claim history of SMEs within Ireland, looked at the value of the benefit that companies were claiming, and from a cash flow management point of view, looked to increase that from 75 to 87.5. Personally, I still think it's a little bit low, but look, you know yourself. government and Department of Finance move in stages. So I would hope that in the coming years, as part of updated budgets, they'll increase that first year threshold as well. Just to give you an idea, a snapshot of how many companies claim and what the cost or what the value is to the Exchequer. You can see there back in 22, there was just over 1,500 companies in Ireland claimed to the tune of about 1.15 billion euros. Okay. That so in 2023, unfortunately, Revenue publishes data about 2 years retrospectively, so getting historical data is quite onerous. We've seen a significant uplift. So in 2023, actually, that figure was actually at 1,741, so 1,741 clients, companies claimed the credit, which is obviously a significant uplift from that plateau that has happened over the last 15 years, and it's gone from that 1.15 to 1.31 billion. So you can see a lot of SMEs, in particular in Ireland, are starting to leverage the scheme and realise that actually there's real value and something to be driven there. Just to let you know as well, just an interesting fact. In any other country in the OECD where an R&D tax credit scheme exists, approximately 4% of all actively trading companies leverage that country's R&D tax credit scheme. In Ireland, that is less than 1%. So there is a massive underutilization of the scheme across, I think there's about 270,000 actively trading businesses within Ireland. So, you know, if you turn that down to your 4%, you can see, and there's only 1,700 companies claiming, there's a massive offset in terms of the value or the volume of companies that are actually claiming within the Irish market. Tom, I think this had come back to your point earlier. If you're an external R&D tax credit provider, in particular from the UK, which is a saturated market, I would imagine you're getting a lot of outreach from UK-based R&D tax credit providers sending you those emails coming into you, and you can see both, one, it's an underexploited market, and two, the rate is a lot more favourable within Revenue versus HMRC. So now you have a total addressable market and something that UK R&D tax credit providers can target. So
yeah,
so
you're correct there. A lot of them are UK based, and they've set up small offices in Dublin or in Ireland somewhere. Yeah.
And look from the background, I'm not going to tell. Like, I mean, well, Leighton is as I said, is global. It's actually French headquartered, but I mean, I report into our UK office for the moment as we grow the Irish office. But yeah, you're absolutely right, Tom. A lot of them have maybe one or two people on the ground in Ireland, and everything else is delivered from the UK. Whereas, as Michael said at the start, we've 9 and we'll go to 20 next year. So we're investing significantly within the Irish market. Okay, cool. I just wanted to stack this up and show you. Again, I don't know if people are able to or not, but even from a digital show of hands, does anybody leverage grant funding from either their local enterprise office, Enterprise Ireland, or IDA Ireland within your current setup? Tom, you do great. And anyone else? No. Everyone else is probably just in a listening brief, and they'll get the recording afterwards. I wanted to demonstrate an example here of how we have a very progressive integrated funding mechanisms or funding system within Ireland. So you can see if you are an SME within Ireland, and I focused on SMEs given what I assumed would be the demographic of attendees here this morning, and you are doing a research and development project within your business that either the local enterprise office or Enterprise Ireland are funding, you may effectively double dip on that spend. Okay, so if you have an R&D spend of, I just made the numbers easy, of 100 there, you get grant aid of 45%. That's if you're a small business, you'd potentially qualify for 45%. As a Leo or an Enterprise Ireland client, you're somewhere between 25 to 45% grant funding ratio there. You net off your grant aid, and then you can claim your R&D tax credit on the net spend. So now the actual net cost of delivering that R&D project within Ireland is significantly reduced as a result. So for a spend of 100, the actual cost to you is only 38.5 as a result. So you can see, and that's only going to increase / decrease depending on what way you want to look at it, as the rate then moves to 35% as a result. Anyone part of a global multinational kind of in scope 1, scope 2 from a BEPS qualifying tax rules or anything like that? No. Possibly not. Okay, Grant. We'll. But there's one or two examples there. I can send them on afterwards. I'll send this deck to Maureen for so that you can all have a copy of it afterwards, one way or another. Okay, let's get into how do you actually, what does making a claim actually look like? So there's two things that you need to compile prior to filing your CT1 and capturing the R&D tax credit when you file your CT1. And that's the science test and the accounting test, okay? So I touched on the science test earlier in terms of that you need to demonstrate, as I said, that scientific or technological uncertainty. You need to demonstrate the advancement in the field that you're making, and you also need to demonstrate the systematic approach that you took to actually deliver on that. The second part then is the accounting test. And the accounting test quite often is a function of the science test. So once the qualifying work you've done within your business has been captured and you allocate time towards it, and personnel and employee costs, you can then start to roll up the financial costs with that. Okay, and then those combined give you your qualifying R&D. What kind of costs can be claimed? Well, you've got payroll, you've got subcontractors, there's certain elements of plant and machinery, consumables within the business. There's a flat overheads rate. One note I'd make on rent is the ruling is that if it's a pro rata rent fee that you're going to put on your R&D, you must be able to demonstrate that the pro rata rent allocation you put towards your R&D claim is wholly and exclusively involved in carrying out R&D, research and development activities, and then some contractors as well. There is some rules around subcontractors and contractors around the split between your internal spend and your external spend, but we can absolutely come to that secondly. And you can see that the legislation asks that you must maintain a record of expenditure in the carrying out of those activities. Okay, but that's your accounting test one way or another. Pre-notification. If you have not claimed R&D tax credits, either one at all or more than 3 accounting periods ago, you must pre-notify revenue 90 days in advance of your intention to make a claim. Okay, this is a 2-page document. You can get it. It's on Revenue's website. It's a 2-page document that really just says how many employees and a brief technical outline of what the projects look like, and are you getting any grant funding. Okay, it is not a legislative requirement to do this. However, we recommend to all our clients not to break the 90-day window, or if you are, that it's only within a week, one way or another. We did see a scenario where a client said a week before filing their CT1, they filed a pre-filing notification and then filed the CT1 a week later. And as you can guess, even though it's not part of the legislation, a level 1 inquiry came in from Revenue within a month of the CT1 filing. There was no issue. We were able to deal with the level 1, but it's just kind of seen as bad form rather than anything that's in the legislation. Case studies let's try and put a bit of tangibility on some examples, and also just have 3 examples here to just quickly talk through. Michael's going to touch off them really quickly, and then after those case studies I will really quickly touch on grant funding if anybody wants to understand that, and the types of grant funding that's available from either your local enterprise office or Enterprise Ireland as well, and how you can maximize the grants and the tax credit at the same time. So Michael, will I let you kick off first and foremost, and then absolutely happy to I can turn off record then, and if there's any specific generic examples you guys want to talk about or bring to the table within a trusted environment, you're absolutely open and free to do that. So Michael, I'll let you kick off here.
Thanks, Dara. I suppose just in terms of the case studies that we have on our slides today, it's really important, that these are all kind of going towards some of the regulatory pressures and some of the more kind of widespread areas that your teams might be tackling. So if you're working with Board BIA, you might be under the Origin Green Scheme. If you're with Love Irish Food, etc., you might be trying to promote materials, etc., that are manufactured in the country. And one thing we definitely see is this development of biodegradable and compostable recycling solutions, particularly as more kind of regulations come out from the European side of things in terms of how much plastic needs to be recovered off packaging. We see a lot of teams working with kind of new materials, new coatings, etc., to ensure the durability, the shelf life, product protection, particularly during transportation. As supply chains are getting longer. One of the kind of areas that came out during the COVID pandemic was that a lot of product was being held for a lot longer before it was reaching its central distribution points. So that was causing a lot of collapsing issues, boxing down issues, things that, where you had a minimum amount of headspace before, and those types of things, they were kind of really exacerbated by the fact that the product was being held for so long. So you'd see a lot of work going into kind of reinforcing products on pallets, etc. So it'd be the systems that'd be involved there in terms of the end-to-end development, just to ensure that you have kind of cohesive work going on between if a product's in a bag in a box, or going into particularly in terms of renewables, where you might have recycled trays, etc., going out into the manufacturing system for return later. So there'd be a number of areas there in terms of visual inspections, maybe cameras on the line, imaging, anything to do with kind of metal detecting, that sort of stuff as well. So you definitely would have a pickup in R&D in that space for packaging materials and sustainability. And then other areas, where you might have specific customers coming in asking for things, or they no longer want paper labels as part of their process. So you would be reverting to maybe some of the off-the-shelf solutions for print on pack. And there again, you might have to have an integration that's not plug and play in terms of what you can get from a supplier. You need to have something that's kind of in-house and custom for yourselves. So there might be some iterative work there to be able to develop that print on pack solution for customers, etc. So then in the case study 2, process innovation in print and packaging production. So one of the things we probably would see is where waste is kind of identified. So I suppose if you're a manufacturer and you've been working maybe on lean processes, and your kind of overall equipment effectiveness, and you've really worked on kind of waste projects, and now you're kind of looking a bit deeper into your energy consumption, or you might have sensors on the line for detecting how much steam or gas you're using at your site, or how much of your energy is coming from sustainable sources, including solar or wind, and then trying to optimize your material in the factory. So where you're trying to kind of reduce the number of waste streams that might be coming out of your production. You might have the work that you're doing on kind of reducing the micron depth of particular plastics. You might have more kind of integration of the different tech stacks for your printing technology. So information coming out of the cloud needs to be translated across different APIs. You know, particularly if you're working with different carriers like OnPost or DPD or Amazon, etc. There would be some kind of integration there. So again, you'd probably be looking to increase the throughput, etc., or the kind of where you have information coming from the cloud that might need to be held temporarily before it's used at site. And then you might be looking at areas where you need to do some research and development if there's issues in connectivity, where you might have black spots in the factory in terms of Wi-Fi dropouts. So you might need some specific handsets or something like that in terms of being able to kind of manage that information and make sure that it's secure online and offline as well. And then I suppose the last case study would be the advanced design and functional packaging solutions. So we'd work with a lot of food manufacturers as well, where you'd have companies that might be trying to do some smart packaging in terms of product preservation. They might be trying to reduce the impact on light. So you might have more companies working with kind of multi-barrier films, or as those kind of become reduced in terms of the availability of virgin plastic out in the industry. You might have products that where they're trying to reduce the micron level, but also improve the UV barrier effects on particular products. There might be areas again where you're trying to work on reducing emissions. There might be something particularly at your site in terms of effluent discharges or wastewater management that you might be working on. Again, we would see kind of companies trying to use a little bit more in terms of smart technologies on the sensors there, trying to get some feedback in real time and be able to adjust their lines accordingly. So here again, in terms of experimental development and industrial scale development, you'd have the kind of prototyping on the commercial scale, where you have technical challenges in that area, and you're trying to overcome them to deliver out the solutions for your customers.
I put myself on mute. Sorry. Thanks very much for that, Michael.
Yeah.
Look, hopefully that has given some value, provided you with some context, some examples, some maybe gotten some of the creative or mental juices flowing to kind of understand what, well, actually I didn't think I was beforehand, and actually maybe now I am. The one last part I just want to touch on really quickly is just around the grant funding piece, and I'll just really quickly give you, I suppose, my 3 questions that I always tell people to ask themselves before applying for grant funding. As I said previously, I was previously an R&D director myself, and I used to go to I used to know when it was coming, because I'd be listening to the radio, I'd be listening to Morning Ireland or something, or I'd see something in the newspaper over the weekend about a new grant funding opportunity that had opened up, or Enterprise Ireland would have launched something, and I'd know within an hour of landing into the office, I'd get a phone call from the CEO going, "Dara, go and apply for that grant funding." And I'm like, "Perfect, Ronnie, but for what? I don't care, just go and get the money." So, and that is 9 times out of 10 the approach that a lot of companies nearly look at the grant funding, and it's a kind of a cart before the horse approach. Yes, it can give you maybe a quick win, but then it can end up causing you more issues in the medium to long term as you try and make square pegs and justify back to the grant funder that actually the work you did actually was eligible for the grant that you drew down one way or another. So the 3 things that I'll always say to question companies. One is, what is the commercial priority of the project or the initiative that you want to deliver? Okay, and ultimately, is it if the commercial priority is immediate, i.e. in the next 3 to 4 months, I'd say, unless you're already a Leo client or an Enterprise Ireland client, I'd say go and do it yourself. Just put the money behind it, build a business case, go and do it. Okay, because unless you are already a client, these things take time, and you have to kind of build up almost a credit bank with the likes of the local enterprise office or Enterprise Ireland to justify that actually you can deliver on what you say you're going to deliver on. So if your first interaction with them is going in and saying, give me 50 or 80,000 euros, please, to deliver on a project, they'll go, whoa, relax, we don't even know who you are. Here's 4,000 euros, demonstrate you can deliver a proof of concept, and then we'll talk about something chunkier after that. Okay, so that's the first thing. If it's a bit more medium, longer term, well, then there's different grant funding options there. You can start to look at it. Local enterprise office, Enterprise Ireland, will give you a decision fairly quickly, probably within 3 to 4 months, but the grant funding rate is lower. Okay, so you're looking at that 25 to 45% funding rate. It's also a function of risk. Okay, so obviously if it's a higher commercial priority, the risk of failure is going to be lower. Okay, so generally the higher the risk profile of failure within the project, or failures occurring within the project timeline, the higher percentage funding you can get. Okay, and then that's when you start looking at stuff that's, you know, kind of national funding, collaborating with other companies, maybe looking at European funding where you might be able to actually get somewhere between 50 to 70% funding, but the admin load is higher. And the timelines to deliver these projects are what I'd call Horizon 2, Horizon 3, you know, 18 to 24 months, 36 months and beyond. Okay, so yes, absolutely. If you've got a transformative project within your business that has like a 5-year horizon, yeah, you may be able to get a 70% funding rate for something like that. But it's going to be about 12 to 18 months before that money ever hits your account. That's how chunky the process and the admin load will look like. Okay, potentially. The second thing I'd say is what is the technology readiness level of the project that you're going to work on. So if you're not familiar with the TRL scale, I'll stop sharing this and bring it back to this. If you're not familiar with the technology readiness level scale, just Google it. It's a scale that was actually developed by NASA back in the original lunar program. Obviously very kind of pertinent at the moment with Artemis and all that, but they developed it back in the late 50s, early 60s. Basically, TRL 4 is initial proof of concept. Okay, so you've demonstrated that it can be done. TRL 7 is prototype, has been developed. Next stage is commercial launch into the market. So TRL 8 then is actually a more commercially focused activity. And as a general rule of thumb, what I'd always say to businesses, both from a grant funding point of view, but also from an R&D tax credits point of view, is if you can put the work that you're doing somewhere on that TRL 7 or under, there's a very strong chance that actually it qualifies. Okay, yeah, absolutely. So, but TRL 8, commercially focused activity, operational focused, delivery, sales, marketing, no, absolutely not. Okay, off the table. Okay, in terms of that. And then the third thing I'd say to you is what do you need to actually deliver your project? And that comes down to 3 things. Okay, it's either you need a cash injection, i.e. grant cash into your company to deliver it. You can do it within your business. You have the people, you have the equipment, you have the resources available, but you need a cash injection to actually do it. Okay, so that's the first thing. The second thing actually is you need access to capability that you do not have in your business, and it does not make sense for you to acquire within your business within the long term, and you just need to access that externally, maybe with one of the technology gateways, one of the research centers within academia that have a lot of this equipment, and you only need it for a short-term access to be able to actually demonstrate that this project is actually viable and works. Again, there's grant funding there to be able to do that. And then the third thing is access to is skill sets, basically. And it's either to retrain your existing staff into skill sets they don't currently have, or it's to access skill sets that currently exist outside of your business that you need to deliver on these new projects or new initiatives. And there you're looking at, you know, do you do an innovation partnership, for instance, with a principal investigator in one of these technology gateways? You get a postdoc for 12, maybe 24 months into your business. That's subsidized to the tune of, their salary can be subsidized to the tune of about 60 to 70%. You know, and they work on a very specific project that you have designed for them to work on in collaboration with an industry-focused academic researcher, and that industry-focused part is the key part. You know, you don't want them going off on research tangents. You want them focused on your business one way or another. So that's the end of my missive, my spiel. I will stop recording.